All right, you made it to lecture two in the shit show sequence. Um, I'm pretty sure that the way I'm viewing breathing rooms might be a bit diffuse, but that will get easier and easier over time. We're trying to get you away of the restraint that all of these rules that you might have previously had. We're trying to get rid of that stuff, right? We're trying to get rid of all the objectiveness in the market because at the end of the day, the market is not objective. That's what we believe it is. But from my eyes and how my brain works, I love to see the market as an ever ending flow. It flows through the chart, right? It's trying to tell you when to get in. And it's not looking to stop you out either. If it stops you out, you misread the market. We're gonna get to know one another a whole lot in the upcoming weeks. I hope you finished your homework as well with breathing rooms. That's the very most simple slideshow and homework that you might have ever gotten. Just mark things out, mark things out. But again, these are your firm foundation and your building blocks when you are looking to learn my own model. So it's very important that you really understand the breathing room aspect of things. And we'll get into these things and you will understand why they are so important in this very lecture. Now, this might feel like it's repetition, it's something you might already know, but I'm pretty sure there are going to be new things that you're seeing, even if you have never studied my model before, or if you're looking to just deepen your knowledge within the model. What I tend to say to my profitable students that I have right now is you have to repeat the work that you have done before. They keep going back over the videos again and again and again because every time they watch through something, they learn something completely different. It's almost like it's a completely new video, new format, new sentences. Like I have edited the video, but in reality, I have not. And you're gonna realize that as well, especially after these 6 weeks has passed. So for some, this might be some new information, but for others, this might be a very different way of thinking. You may also know me in terms of I love drawing a bunch of scribbles on the chart. That's how I teach. That's how my mind and my brain functions, right? If you're looking to learn from my brain without any sort of filter, that's what's happening. I love to paint it all in front of me because that's how I remember price. That's how I remember my own model. That's how I remember my own patterns. I draw this story. I draw these lines, these wonderful, wonderful lines that has completely changed my life, man. So I can understand it might be confusing. It's a different way of teaching, but you want the real deal, so you'll get the real deal. You get to be part of my brain and how it works and how it functions. And I think that's specifically true to people that are trying to figure out this model. It's very, very important that you not only understand the model, but you also understand the person behind the model. And you have the privilege to do that right here, right? You've taken the step in the right direction. It's also not, completely cut wonderful videos. I don't cut my videos, I really don't. And the reason being is I want this to be as personal as possible. I'm gonna stick to that. it's very important for me that we make this progress a personal one. Because how can you learn if you're just one out of the hundreds that are utilizing this model? And at the end of the day, you're trying to create your own thing out of this. But that is, again, when you're looking to dig down deeper into this stuff in the very group that I have ongoing with some really good traders that are have found profitability within 4 months and faster than that as well. As a matter of fact, I had this one guy just joined as a members three. Um, it's been about we're not even done with the lecturing part yet, but he has already started to see a huge amount of profitability within about 3-4 weeks. So that's very exciting. So hey, have high expectations, and I promise you I'm gonna make sure to blow your mind, right? That's what we're here to do. All right, let's get into it. Let's skip this slideshow and jump right into the charts. All right, here we go. Finally, some scribbles on the chart. Make sure to get your pen and paper ready, right? So what you have learned so far is these areas, right? They can be this size, they can be this size, they can be, this size, depending on different time frames and multi time frame sequences. That's gonna definitely blow your mind in the future. But the reason why we're talking about this wonderful, wonderful thing right here is because that will be your starting point. Your eyes are going to be drawn to these points in price. Why? Because these areas right here are going to start to set off a potential sequence. This, what you have right in front of you, is what some people call seek and destroy, but it's clearly not. This is just a pure sequence right here. So, what is happening in here is what I always do, and what you should always do as well, is first and foremost find number two. Why is that a number two? Well, it swept one breathing room. Apologies. Swept one breathing room, and then it looked to go higher to sweep this high. Uh-oh. Some people might be like, but Jay, wait a second. Shouldn't we look for a short here because that's the MSS? Well, the reason why you have been taking so many losses with so-called market structure shift, right? Change in order flow, whatever. The reason being is because it's looking to take you out majority of the times, as a matter of fact. And the people that are able to utilize pure market structure, they are very, very good at just reading the story of what areas are going to hold and what not. I sucked at that. That's right. I sucked at it. But guess what, guys? What came out of being a horrible ass market structure trader, my bad. What came out of being a very terrible market structure trader? Well, let's just create something that is better than market structure. Something that predicts it. That's right. It's a bold statement, right? Something completely new. Everybody's using market structure and it's this amazing thing, but in reality, there are more powerful things to it. So, we sweep one breathing room, and you should be a freaking professional at this point of looking at breathing rooms. Then, when we have marked out the number two, you mark out the number one. Why do I do that? Well, because if price continues going up just like this, you would have 5 billion ones, right? So here's the kicker. The number 1 can only be created when number 2 has ran that high. So the 1 is essentially just for viewing purposes. It just makes sense. And it's going to make more sense in the future, let me tell you. There's a reason behind this. So we marked out the number 2 and we marked out number 1. What does this imply? Well, after 2, I'm pretty sure you know this good enough at this point. We mark out the number 3 up top. Why? Because that 2 swept that 1 high, that created the 2 officially, that set up the 3. That 3 could potentially run lower into what I call the shit show levels, right? SS levels. These levels are to be targeted, and I promise you, if you just mark out the sequences that are both efficient and inefficient, you're going to see a lot of things going on at these very specific areas of price. That's why it's called the shit show model. There was a bunch of shit happening around that too, whenever that happened, right? It bounced back into it, moved out of it, moved down, swept it again, moved higher. See, it did that over and over. So whenever that 3 runs into the number 2, we have clearly the 4 and 5. 4 and 5 does not have to look like that. 4 and 5 could look like this for me. The reason why I keep it at 4 and 5 is just because in the beginning, again, as you may know, my model was based around Stoics SBS, but I made my version out of it. So essentially, you could just do this if you want to. Just mark out the 4. That's completely fine as well. But because I'm very autistic, I want to keep it as it is, right? So the 4 and 5 runs higher and then drops below itself. That tells us that the next sequence we're looking to take out of is a short. But I just draw a line up top. Why did I do that? Well, since you're a professional at understanding breathing rooms, the 4 and 5, whenever that runs itself, it becomes bearish, right? If the 4 and 5 instead ran that 3, we are now obviously bullish. It's not a failed 4 and 5, it's not a successful 4 and 5, all right? It's just a 4 and 5 that did something, that told you what the next 2 is going to be. In this case, the 4 and 5 ran itself. We ran up, swept a breathing room, created a potential 2 to run lower and sweep these lows. And now you suddenly see a whole new sequence. And so what is important here to understand is that this is a sufficient sequence. This is a sequence that did its job, right? It all played out, all the numbers appeared. But what you can have, and I'm sure some people are going to be questioning this as well. So, is this very thing right here. What you now have in front of you is the sequence itself that is inefficient. Why is it called inefficient? Well, all the numbers did not appear on the chart, right? If you read this correctly, all of the numbers did not appear on the chart. Matter of fact, what happened here was swept a breathing room, created that 2. We have that 1 sitting above, and that's the 3. 3 tried to run into 2, but it didn't. See what I'm trying to do here with your mind? I'm trying to create that story. It's it's trying to run lower, right? It's trying to push there, but it cannot. Shouldn't that sort of indicate you that if we're not looking to run higher, we're looking to, or run lower, we're looking to run higher? So whenever price is so-called creating inefficient sequences. Those are to be marked as shit show levels. These are the strongest PYs in the market, and I can promise you that. I have yet to see something as powerful utilizing POIs like these suckers right here. They are extremely, extremely powerful. So now you have the efficient sequence, and now you have the inefficient sequence. We reached the number 3, but it just continues higher without sweeping that SS levels in here. That 2 is created, running higher, sweeping that 1, creating that 3, trying to run lower, and it successfully does so. And then 4 or 5 tells us what the next sequence direction is going to be, right? So now you have the efficient sequence and inefficient sequence. It goes both ways as well. So both bearish and bullish, right? What I'm gonna run you over here right now is essentially the key points to bring with you, right? The key points that you need to understand. And that's where the 2 turns around. Where does it change place? Because at the end of the day, it clearly, if it's inefficient, then you're going to view it one way. But just because if price is going up like this, it doesn't make any sense that you're putting out a bunch of 2s up top. And to the people that have studied my concept for some time, they probably get the chills out of this. But the 2s cannot necessarily be on top like this. If we're going down, the 2s could be on top. If we're going up, the 2s should be at the bottom. Now, what is the common theme here? What is the common thing here that you might see between them? Well, at some price down here, it has changed. It went from being up top to now down below. I'm going to get into that right here. So if we are watching price to the downside, sequences to the downside, right? That 2 sitting up top, running lower, creating that 3, right? Price might be doing this thing right here. And now we have a new 2. At some point in price, it changes direction. How? Apologies. There we go. How does it change direction? Through a failed 2. A number 2 that is looking to run into this low after sweeping the breathing room, but it tries to, but it fails to do so. That sets off the indication of us doing this thing right there. And the 2 has now changed from the upside to the downside. All right. So we are sweeping a breathing room, failing to run below that low, and running itself tells you the indication that we might shift around right here. Sweeping a breathing room, creating that 2, running higher. And then price might do that, for what I know. And then the 4 or 5 arrives, we're bouncing at the 1 bounce, and then it might take us to the upside. That's now a bigger breathing to run down here and then take off. This is what price can look like. And this could definitely be called for some people seek and destroy conditions, but in reality, it's just people that don't understand what price is doing. They're not able to read the story in between the lines, right? So price can change in 2 very different ways. It's through a so-called fail 2, when the number 2 after sweeping a breathing room is trying to run lower but runs itself. That should give you the indication that you're now looking for long 2s, right? Long, long. The other indication that you have is when price does this thing through a efficient sequence, right? You have that 2 sitting here after sweeping this breathing room. We're running up into that 1, creating that 3. That 3 runs into that 2. We create the 4 or 5. That runs itself, telling us next sequence should be bearish. Price runs up, takes that out. 2s has now gone from below, right? Let's see if I can do if I can do this backwards. 2s are now going from below because we're bullish in price here to now we're bearish in price here. Why? Through this very area of price. All right. So there are some key points to take away from this and take out of all these things. We have the efficient sequence, right? The efficient sequence 1, 2, 3, 4, 5, and then 4 and 5 tells us the direction of the next 2. So in this case, we turn bearish because we run that 3. That is a 2 to run lower. The other scenario is the inefficient sequence. It's many times when price is looking to expand a whole lot, to run higher over and over and over again. The reason why it does that thing, my friend, is because we might just run higher, run higher, run higher, just to reach a last shit show level that is sitting from before, a last inefficient SS level. And now you have price bouncing from this level to these levels. So many times when you have seen me predict price of where it's going to go, high of the session, low of the session, is many times just through these levels. And I say, this is the last shit show level. Shout out to my LSS model. And then price drops like crazy because we left out all of these levels after succeeding to run the last shit show level up top. So we have inefficient sequences, we have efficient sequences that you have to view. Either way, whenever a 2 runs into 1, that creates the shit show level up top here. That's the stuff you are going to utilize looking at POIs for later. And then you have to decide, did we sweep that thing or not? Now, I want to add something to this. And that is, if price now decides to go down from here, that does not mean that this is the 4 or 5. It means that this is the 4 or 5 again. The 4 or 5 can only be created within this specific area. So if price does, for example, this thing right here, and this thing, and this thing, and this thing, now we've just moved away from this entire sequence. Just treat it as a POI. You're just looking to target this level, but it doesn't necessarily turn out to be a 4 or 5. All right? That's something very important. So you have the efficient sequence, you have the inefficient sequence, but what we will add as well that we've gone over now is how the 2s change direction, right? Where are they located at in the chart? If we're going downhill, right? 2, 2. So we have that 2 and that 2. See how we're going downwards here? Bearish. So 2s appear on the top. 2s don't appear here. That's for later. That's for later lectures when we have multi-time frame sequences. Then you have, for example, This is the first very example. That's the F2. What does the F stand for? Failed 2. Why is it called a failed 2? Because it tried to run into this low, but it did not succeed to do so, right? Tried to run down here, but it just couldn't do it. Now the 2s are going to be changed to the upside. So they appear on the bottom. That's the key rule that you have to keep in mind, right? So this model is a very much flow state model. So it's very important, my friend, that you understand that I'm trying to get rid of your objectiveness when it comes to the market. I'm trying to make you flow with it, right? We are looking at the expectations of the future together with the current, and we are just acting as the middleman in between there, right? So we're leaning forward into price ahead, and that's why you're staying ahead of market structure, right? So this is the one way it changes from the 2s being on top to being on the bottom. The other way you can do that is this. 2, 1, 3, 4, 5 runs itself, meaning if we run itself, we're bullish in this case. If we run down here, we are continuing being bearish. From this point, the 2s are now to the upside, happening on the bottom instead of happening on the top, right? So we've gone over failed 2s. We've gone over efficient sequences, inefficient sequences, utilizing these and being able to spot them in price. This is the core of my very model. And it's important that we get these basics. Otherwise, it's going to be very, very hard to teach, right? It's going to be very hard to comprehend the information as we go on. The next time we're going to run into advanced sequences and we're going to start to incorporate a couple of things. We're going to start to add in a little spiciness here or there. So it's important that you really get the understanding behind how the sequences are utilized and some tiny rules there that are not going to keep you astray from seeing the sequences, but being able to read them in real time as they're playing out, trying to understand the story behind why it's happening, right? I promise you, after just another week, 2 weeks, market structure is going to be way gone when you focus and dial into just watching sequences. Market structure is going to feel like the past when you really push yourself here, all right? So, when we're looking at all of this, now you understand why it's very, very important that you understand the breathing room aspect of things. Because if you clearly don't, you will be screwed over. Because at the end of the day, when we're jumping into multi-time frame sequences, advanced sequences, ISS levels, we're talking about CBCs as entries, you have to understand what is a breathing room and what's not. You have to understand what to look at, where it begins, right? Because that breathing room is going to be the very spot where the sequence begins. Now, this is happening across all charts, all times of day, at all times, whatever chart you want. You can watch freaking milk or whatever. If it's a chart, this is going to play out. So it's important that you understand and read through the market from now on, trying just to see the number 2 and find everything else around it. Understand the sequences, look for the entire sequences playing out. Oh, this is an inefficient one, this is a efficient one, and look through how price is playing out. You're going to see some pretty amazing things. You can go and back test that stuff, you can forward test it. Just look through it, try to read through it. And that's what you're going to do with this upcoming homework. Because, yes, my friend, you're going to have 300 sequences. 300. They could be inefficient, they could be efficient. But you're going to note down 300 sequences so that gets burned into your brain. And some of my members in high tier, they still repeat that process to this day. At least 300 sequences marked out every single week. So this is some stuff that I can't stress enough, and that they can't either, because if you don't do this properly, you'll have to do it again. And it's definitely going to reward you if you just put in that extra effort. And what I've always told my students, whatever tier they are, try to do everything I tell you, but 3 times more. That would mean that you would do 900 sequences instead of 300. If you're willing to put in that effort, you're going to see a faster progress, a deeper knowledge, and you're going to progress way faster than everybody around you. You're going to lock in your mind. You're going to force it into your brain. And I remember, especially in the beginning, I was so crazy when it came to these sequences because I saw the potential in them that I started seeing them in front of me paying out over and over. These very charts right here. And I did them also with my finger. I did them, in the air. I was just sitting and drawing out the sequences, playing out over and over again, so that my brain just absolutely digested all the information that is about to come and what is actually playing out right now. And again, this might be some old news for some of you, but for some, this is some of the craziest stuff you've seen because it explains why you tend to be stopped out. Oh, it's a market structure shift up here. Let me take a long, stopped out. Oh, okay, it shifted. It was just a fake out. Let me take that short, stopped out. Okay, price now we're looking to go long up here. Stopped out right here. See what I mean? What you were previously stopped out on, you're now being part of the move and understanding it ahead of time. Because again, if that two is sitting right here, that must have meant that up top here. Let me see if I can do this backwards again. That must have meant that the 4 and 5 over here ran itself that told us the next sequence is going to be bearish. This is how price holds together. It ties together like a story. Over and over again, my friend. And so these sequences are very important to understand, especially the basics. Now, I don't want you to get messed up when it comes to further on, more advanced information. So really run through these things. Really note down 3 to 900 sequences. And you do that in a week, right? So a quick recap. Failed twos, successful twos, right? Successful twos being the two that runs into one to create the three. Failed twos trying to run into that one but fails to do so, meaning it runs itself. We have efficient sequences, we have inefficient sequences. Huge difference here. Why? Because inefficient sequences usually sets out the current PY that we are going to mark out on the chart, where price is going to run back into tap and explode away from. And just that very thing, just knowing that very shit show level has made people profitable. That very line on the chart. And that's just a fact. That's just a reality. And you just have to trust me when it comes to that. Um, so this was it for me for this very lecture. Again, as you can see, it's completely uncut because I'm looking to make it very personal. I believe in making stuff personal, so you really feel like I'm actually here. I'm actually running you through these things. And I like to teach in a personal way. I like to chat. I like to say the wrong thing sometimes in terms of the wrong the wrong words, right? It's not all sunshine and rainbows. It's just me, my head, and some charts, and that's the reality of it. This is this is trading itself. It's not some hocus pocus, some sugar coating. I don't do that stuff, right? This is the real deal. This is what trading actually is. And I believe, and a lot of people waiting for you in the group as well, believe that you've come to the right spot at the right time. Um, so, yeah, other than that, there's going to be a separate recording that I've had for the um, the members that I've recorded from the past in the group when I've taught these very things as well. There might be some more tweaks and twists and add-ons in there as well. That's why I'm looking to provide you with that extra material as well. All right. I'm actually looking to make you understand this very model, and I'm gonna make sure of that you get all the knowledge that you really deserve without sugarcoating, straight to the point. My brain on the charts. This is this is what it can look like, my friend. All right. So with that said, this lecture is over. I hope you enjoyed it. You've got some work to do for the upcoming week. Put in your head into the charts, draw it out, note it out. 300 to 900 sequences. 900, you're doing really good. 300, you are just average. So I'm putting that pressure on you right there. With that said, people, I hope you have a wonderful week of back testing and a lot of charting. And I will speak to you very, very soon again. See you around.